Good morning, traders and investors. Bennett, TradingAnalysis.com. Happy Wednesday, July 28th to you all. Can't believe we're already almost through July, heading into the month of August. Earnings week is upon us. We've been hearing from big tech. As you can see, bottom left-hand corner of your screen, we've got the S&P futures up, but if you just watch that chart, Apple reported last night after the close. We also had reports from AMD along with Microsoft. Microsoft is about flat. Apple is seeing, or did see a bit of a pullback. We're essentially back to the 145 handle here going into the open. We also saw a move out of Google. Ad revenue there was very promising. Facebook reporting after the close. I'm going to be diving in to that with our members here after the show. But great breakout there, 27.75 after hours high last night on pretty decent volume for after hours trading. We also had reports from Visa, Starbucks reported. Teladoc reported. Teladoc is a name that we've previously traded here at Trading Analysis, and I'm actually watching that one for a potential base of support for a longer-term reversal once this correction comes to completion. But so that's it. We've also got here, let me just jump over to my screen. We have, courtesy of earningswhisperers.com, a breakdown of some of the most anticipated earnings releases out for the week. And as you can see here this morning, we also had reports from Boeing, Shopify, Pfizer, Tilray. We're hearing from the cannabis industry. Some interesting rotations at work on the RRG there. We also have McDonald's this morning, Spotify, Bristol Myers, Teva, Thermo Fisher Scientific, Generac. Generac has been on an incredible rally. And then after the close, we've got Facebook along with Ford, PayPal, Qualcomm. So it's the who's who reporting this week. Tomorrow after the close, we also have Amazon and Pinterest. Pinterest is of interest given, hey, there you go. Pinterest is of interest given the recent move that we have seen in some of the other social stocks, including Snapchat. Snapchat is a name that we've been tracking with our members for a reversal. An incredible earnings gap there. Saw a sympathy move out of Twitter. So we'll see what Pinterest does. We also have Twilio tomorrow after the close. So a whole lot going on. We do have the Fed meeting today as well. We'll have Alex in to talk about that in just a little bit. So that's it. Let's go ahead and bring in the trading analysis team. Good morning, gentlemen. How you doing, Terry? How you doing, Alex?
Good morning, guys. Good morning, world. How's everybody doing today? Watching the Olympics.
Yeah, that's right.
Watching the men's volleyball, USA versus Tunisia. It didn't start out to be a very good game for the Tunisians, but they pulled it back and they made a good game of it. So US ended up winning that.
Nice.
4 games. Yeah.
It's kind of funny. I logged into what was it? YouTube TV? I think it's YouTube TV. One of the many subscription packages. And it prompted me. It's like, hey, do you want to record any of the upcoming Olympics? And it was really rather interesting that they are breaking it all down so well, at least on that platform, by category and giving you that option. So, what time did that?
Here on three different channels. So
is it really?
We just kind of flip from channel to channel, and so you can see different events. Of course, I'm sure there's a lot more than 3 events going on at one time, and like you said, that's really cool if you can pick the event that you want to watch, go record it, and just because it's almost impossible to see it all on TV.
Yeah, you'd be Olympic hopping. So what's up, Alex? How are you doing today?
Hey guys, what's up? Pretty much the same. I'm watching Olympics from my countryside.
Nice.
And it's usual stuff. It's hot, and we are all inside the houses during the day. Watching Olympics, scanning the markets, moving Bitcoin was interesting regarding Amazon. Kind of a rumor announcement, which was denied by the company 2 days afterwards. So,
they came out pretty quickly and shut that one down. But it's incredible to see the price move, right? In light of that rumor, Bitcoin rallied, north of 40K. Not quite 41, but looks like 40.7. Incredible run.
Yeah, it was pretty much early my time in the morning, and I woke up like I have an unconscious connection. So the members were there. Yeah. So I just woke barely 10 minutes after it happened. So I look for the catalyst, and when I read this news flow from the London second-rated, I will say, news agency, the publication of that was very suspicious in the text.
Mm-hmm.
So all of that was constructed because somebody actually was an insider, and also somebody saw a post of the Amazon that they're asking a blockchain specialist, which basically doesn't mean anything. I mean, they are maybe into making their own cryptocurrency. So as we watched unfolding it on the upside, 2 days later, the news was denied, and they say they will not be even prepared before 2022, even 2023, to go and actually include cryptos in their payments. So, but it didn't went down on that news. So, all of these dynamics is very interesting because it's more as you have seen in the past what Elon Musk has done with the market. So, and also there is a Fed meeting today, which we're going to talk a little bit afterwards. So, kind of an interesting stuff in the last couple of days.
From Elon tweets to rumors of Amazon, Bitcoin has been on a roller coaster of a ride. We'll have Alex in just a moment to take us through the macro scene. And then, of course, tomorrow morning, 9 a.m. Eastern on our Trading Analysis YouTube channel. He's got his own Crypto Lab show where he dives into the full world of crypto. But yeah, definitely interesting to see how that all progresses. And I think at the end of the day, we're still contained within that correction. And I'm sure you would agree.
Yeah, definitely. I'm still looking for some options. We also included this move on the upside as one of the options in the last Crypto Lab, but I treat this for now as a corrective pullback. I have alternative scenario, but for now, I treat this as a potential flat, and we will see. But for now, it's still looking as a corrective pullback.
Yep, only time will tell. All right, boys, I'm going to take them through the charts really quickly, touch on the indexes. We're also going to cover the Russell 2000. We're going to dive into small caps as well. So I'll be back on the other side, and then we'll go into sector focus from there. All right, I'll see you guys in just a few moments. So good morning again, and thank you guys for tuning in. Let's jump into it. Hard right edge of the Motive Wave platform, our preferred tool for Elliott wave analysis. So we're taking a look at the NASDAQ 100, and I continue to track this structure as still part of the same impulse off of the COVID lows, which means we've yet to complete the initial wave 1, and we do have the possibility of a wave 2 pullback, which could take you to a variety of retracement levels. Now, the alternative view that I've introduced over the past few weeks that says, hey, look, we've got a major 261.8% Fibonacci projection of wave 1 to contend with at 15,331 for the NASDAQ 100. That's a count that could potentially yield a pullback in this larger blue wave 4, which could really even take you back to the COVID lows. This is not my preferred count. This is a back of the pocket. In the event earnings are a major disappointment, we see a sell on the news event, maybe we have a surprise out of the Fed. Last month we saw a shift in the dots. Maybe the talks of Fed tapering continue. We see additional details regarding that, and it sets us up for a larger pullback. Even if this is the case, I'm still longer term bullish in the higher degree structure. And this isn't even my preferred interpretation. My preferred interpretation says, hey, look, we get a wave 2 pullback or any type of a corrective pullback in this market, I'm going to be viewing that as a viable entry opportunity unless that alternative situation sets in and we do get the catalyst to support that larger pullback. But for the time being, we continue to see interest in the pullbacks. We see investors, traders buying these pullbacks. The structures to the upside continue to be trend establishing. The structures to the downside continue to be counter trend and corrective. So we're going to continue to stick to the long side. I pointed this out before, but as I introduce a 23K handle in the NDX 100 as a possibility from a Fibonacci perspective, I want you guys to take into consideration and remember that going back to the 95 through 2000 bull market rally in tech, we broke through the parallel trend channel, we consolidated it, which is exactly what we saw back here. And we're once again right off to the races. From the break of that parallel trend channel, the NASDAQ 100 rallied another 828%. So the idea that we maybe pull back to trend channel support here and then see 100% rally, I don't think is out of the question. Another very interesting takeaway that I had when doing some further analysis last night, and I'm going to present this to our members here after the show when we go into our member webinar. Let me take you over here to a different view of the NASDAQ 100. This is still a very bullish interpretation. It's basically the same thing that we've been looking at, but it makes note of some very interesting trend line breaks as well as some Fibonacci targets that are worth exploring. So once again, from the 1985 through .com bull market rally in tech, the fifth wave was just shy of 61% of 1 and 3. If you take the base channel from October of 2002 through November of 2008, draw a trend line there, and then project your parallel trend line over the .com high, look at where we ran into resistance going into the COVID correction. So going into February of 20, that was the upper boundaries of that trend channel. That was resistance. In this particular interpretation, we are viewing the September of 2018 through March of 2020 as the wave 4 pairing up to this wave 2. Interestingly enough, the correction here, this ABC flat, was 161% of time elapsed in wave 2. Okay, so zooming in, we can now take our 2, 4, 3 trend channel of the green degree to help confirm and shore up our fifth wave fib targets. Look what happened at the 2, 4, 3 trend channel. We broke through it, we've now consolidated it, and we're seeing continuation. So we've broken through 2 very significant resistance points in the NASDAQ 100. So the idea that we still have, you know, a few years left of a extended fifth wave breakout, not out of the question. So let's get off the weekly charts, let's get down to the smaller time frames and give you some actionable takeaways. So the move that we've seen here, we're down on a 15-minute view. Top left of the chart there, we've got the July 13th high, middle of the bottom of your chart there, July 19th low, taking you up here into the July 26th high. We have a very sharp pullback, which retraced 50% of the move here from the 19th through the 26th. It's possible that that was simply a directional 7-swing structure, and that was all she wrote. If for some reason we open up this morning, see weakness into 15,000 to 15,065, then maybe we could visit lower trend line support and kind of retest the area of the previous fourth. We'll see what happens. We've yet to see how the cash session is going to digest the earnings report. Always very important to kind of allow the markets to trade through the evening session overnight into the open. Don't get too carried away with watching after hours trading action, unless it's a move like Google, right? Google, pretty clear breakout. So I'm going to continue to stick with the long side of the market. Here's your resistance cluster. If your resistance cluster does hold between the 618 and 786, look for a potential measured move lower to take you maybe even to a 61% retracement of this. But the S&P is actually trying to tell us that the correction was over and it was just a sharp shakeout prior to getting into tech earnings, that is. Let me show you that view in the S&P. So I'm going to take you all the way down to a 1-minute chart in the S&P, and you're probably going to think, Bennett, what are we doing with Elliott wave on a 1-minute chart? Typically, I would not advise people jump into a 1 and 5-minute chart and try to work waves, structures, and work wave counts. This is typically counterproductive, but there are times and instances in which it can give you an edge and help you determine whether or not a move that you're seeing is directional, as in a motive wave, which is going to establish a trend, or if it's just a counter trend corrective pullback. One of the things that we like to utilize are 7 and 9 swing structures, and that continues 11, 13, 15, so forth and so on. Take a look at how this trend unfolded in the S&P on the 1-minute chart. You have a 5-wave leading contracting diagonal, a 3-wave relief rally, And then if we were to simply take a Fibonacci measurement of that decline and project it from the B wave retracement, that takes you to 43,072.63, so 4,372.63. That would be a measured move decline. Look at the S&P low from yesterday, 4372.51. From there, we did 5 up and a pullback to the 618. Once we had that little 5-wave relief and a 61% retracement, we could say, okay, if we break further south from here at 4372, that's going to open up the door to that measured move decline that I was talking about in the alternate. But if this holds and we continue to see a trend establishing wave, then we could be right back off to the races on the long side of the market. Now, the alternate that I showed you in the NASDAQ is also valid in the S&P. Essentially, this would be A and B as opposed to 1 and 2. And the C wave would find resistance probably somewhere into a 618 or 786 retracement. So I gave you the resistance cluster in the S&P, the NASDAQ. The resistance cluster in the S&P would be 4403 to 4411. If for some reason we fail that and you do see a turn to the downside, we could see a secondary measured move. And then finally, Russell 2000 small caps continue to trade mostly sideways from Feb of this year. We're still looking at this as a possible way for correction, anticipating a breakout higher. From the daily to the 1-hour chart, let's go to the 195 half-day chart. Looking at the 195 half-day chart, top left-hand corner of your screen, March 16th high, wave 3 high, down in A 3-wave move in B, which was a measured move inside of B. So see how this orange C was equal to orange A. And then we have, guess what? Another measured move decline, C is equal to this A wave. From there, we possibly have a 5-3 move at work. Wave count and validation would be 2108. But if we start to hold support here and turn higher, Russell 2000 could be also joining the party on the long side. So that's it for me. Let's go ahead and jump back over to the trading analysis team. Really quickly before we do that, looking at the NDX, 15,005 up to 1565. If that does pose resistance, maybe look for that measured move lower. And then if we break, if for any reason we were to break the July 19th low, then that's when we could entertain the idea that the August correction that I've been talking about as a possibility is here. But I don't see it. Don't see it yet. So that was the NASDAQ. Real quick, close up with the S&P zone, 403 up to 4411. All right, so that's it for me. We're going to roll from here into sector focus, see what Mr. Terry Long has to say in regards to the current move. He did a great job at the end of April picking up on that hook and return to strength and momentum in the growth sectors, and that's continued to trade out. So, Mr. Long, how are you today? You ready to jump in?
Oh, absolutely. Absolutely. Good job on those setting up those fib resistance zones for everybody, Bennett. It's a key when you're watching the markets. You got two things you want to do. You want to know what the overall trend of the market is doing, but the other thing you need to do is, what do I do then? Do I have a group of stocks that I want to trade with? So
yep,
we're going to roll into Optima here, and the biggest part of what I do with the relative rotation graphs is try to steer you guys to looking towards those stocks that are going to be the next group of winners. Okay, so let's hit it.
And you know, Terry, you bring up an excellent point in regards to identifying the support and resistance. As an Elliottician, we have a tendency to get so carried away that it might not be as clear to some of the viewers who aren't as familiar with Elliott. So always good to kind of rein myself back in every now and again. All right, sector focus. Here we go.
Hello, traders. I'm Terry Long at tradinganalysis.com with your weekly sector focus. Let's start with what happened last week. Last week, things started off very gloomy at the open on Monday as both indexes had gapped lower in the pre-market trading. But then slowly the buyers began to file right back into the markets. The S&P closed a little lower on Monday, but it rallied the next 4 days to end the week up 1.96%, setting a new all-time high up here at 44.1179. Even better down here on the NDX. The tech-heavy NDX actually closed higher from the gap lower overnight on Monday, and then it moved decisively higher essentially 5 days in a row last week, rising a whopping 2.93%, and it also set up a new all-time high, which is now the resistance level at the 15,000 mark, actually 15,111.79, I believe. This is last week's performance of the sectors. The communications sector rallied 3.26%, followed by consumer discretionary up 2.95 and technology 2.81, and even healthcare saw about a 2.2% rise, while industrials and materials actually had reversed prior losses with a bit of a bounce higher, but lower still for last week was utilities and energy. Fast forward to this week. And so we started out Monday with a kind of a quiet market, not really, too exciting a price action on Monday. We are now deep in the heart of second quarter earnings season, and we just started getting our first look at technology and communication earnings last night with Apple, Microsoft, Google, all beating their earnings expectations, and still more yet to come as we expect a volatile week while investors digest these reports and forecasts, not to mention the Fed speak today. But Monday's price action, like I said, kind of muted. Both indexes edged slightly higher. However, Tuesday's action became more volatile. The Tuesday's move lower was the first significant move lower in the indexes that we really seen recently. This week, the S&P is now standing down 0.23%, the NDX down 1%. But this move here in the index, if you note here, the shadow of this candle, you can see how it wicks down just above the 20-day moving average and snaps right back up. So that says there was a lot of rejection. The market tried to push down to these lows and then got rejected from that. So if we were to look at intraday bars and look at the decompose this one daily candle there, you'd see exactly where that happened. So let's move on over into the sector leadership here. Now, the leadership rotation that we've been forecasting recently is becoming even more evident now as the real estate sector is cleanly out here in the first place. And we watch as the as energy, let's see here, I got too many little things in the way there. Let's go back to that in just a moment. We watch here as energy and financials push deeper here into the weakening quadrant, and they're basically at the risk of falling further down the list here. If you look today, we've got communications has now, with its big gains last week, it's reformed a little bit of a northeasterly heading. It had been very stagnant. It's still not very sharp of a long vector. It's very comfortable sitting right where it's at here. But now with the push lower in energy and financials, in terms of our relative strength ranking, we now have real estate, communications, energy, financials, technology, all outperforming the S&P. Yes, I said technology. The technology sector has crossed over into the leading quadrant as we had been predicting. As I animate this and go back over the last several weeks, you watch this velocity change. The velocity change is the length of the last line segment. You can see this acceleration to the northeast. And as we gained investor interest in both momentum and relative strength, and now we have technology, communications, real estate being our leading sectors. Now, we had also seen some interesting moves here out of healthcare, and we still have a blue improving trend going on in the healthcare sector, but clearly it looks like a little bit of fade in momentum has occurred right before the critical point of healthcare pushing over into the leading quadrant. So industrials, materials are now both down into the lagging quadrant, with materials having overtaken and passed the industrials on the way down. It had been for on the way up that materials was following the industrials. And then right about here, we started to see, this is back on June 18th, started to see this acceleration happen in materials to the southwest. And now materials and industrials plays are both fading down into the underperforming side of the chart. Here's another interesting thing here. Watch the XLY, the consumer discretionary. So I have been trying to keep you guys informed of what's happening here. With its nearly 3% gains last week, it did as I predicted and formed this clear hook to the north. And now with the northeasterly heading, it is now accelerated back into the improving quadrant, showing both increasing momentum and increasing relative strength. So some really some good things here. Here's a price chart of the XLY. You can see, yes, it did get rejected yesterday, but there's, I'll move that little, if I can grab that little red line, and or not, maybe move it up there. There we go. We'll just change the color of that one below it as a support level. So, but the XLY moved all the way up to new all-time highs on Monday, got rejected. But again, you can see the shadow of that candle bouncing off actually above the 20-day moving average. Last week's action was very interesting because when we saw this decline in the gap lower going into Monday of last week, we actually had the brief pullback to the 50-day and also to the uptrend lower price channel, where we found support off the XLY. From there, we've had a very rapid reacceleration, a V-shaped recovery here, which I definitely don't call corrective in any form or fashion there. So to me, it looks like we have a new impulsive uptrend. And we know within those impulsive uptrends, there's going to be periods of small consolidations before we continue higher. So that's what I've got there. Is there anything else you'd like me to take a look at specifically?
Yeah, Terry, if you could do me a quick favor and just jump into the transports and give me a visual rotation of what you're seeing there.
Okay. All right. Transports is a subgroup of the XLI. So first, let me take you and let's look at what's going on in the XLI. The table over here is the week-to-date price change action. You can see Boeing is currently up about 6% for the week. Raytheon up 3.8. General Electric up about 3. So there's some action going on in the industrials. But collectively, the industrials has got a lot of laggards. It's kind of a mixed boat, so there's really not a lot happening there. But if we drill in, well, let's take a look at the industrials. Possibly has found support here at this 99.50 level, but I don't know. The price action here to me doesn't really look that impulsive. Let's look over here at what's going on in the transports, and let me get those little annoying things out of the way because they don't mean anything right now. The downtrend that I've seen going on ever since June 2nd, we've been in that steady downtrend, and of course with a simple trend channel, depending upon how you draw it, possibly you're breaking above that. It's very early to tell, but there was a very significant bounce off of the 200-day moving average. The problem I have is depending upon your time horizon, whether you're trading or investing, is really your short-term exit was even if you took shorter moving averages, your short-term exit was up here, and you really should stay short until you get a clear signal to return back into a bullish trend. But that said, the 20 crossed below the 50 back here on June 15th. We kind of need to watch and see, do we see this 20-day, do we see the slope of this start to turn back to the north? Possibly, but I think there's a little bit more price action needs to happen here in the overall XTN. Yeah, the XTN is made up of, well, it has a large group of stocks that are still sitting down here in this lagging quadrant, though several of them you can see, as I animate that, you can see some vertical movements indicating that some stocks in this group have reestablished a momentum rise. So some investors have started pouring money back into some of these plays as they've been beaten down. They are still, most of them to the left of this polar axis, means that they are underperforming the benchmark S&P. The only one that's still up here in the leading quadrant is Macquarie. It's kind of a lone wolf. And a lot of your other existing leaderships is still moving to the southwest. Any specific plays you have, I wouldn't just buy the transports, but you might look at some individual plays in here, but I really don't see anything totally interesting. Kind of one other negative I see is a shift to the left rather than a shift to the right. This one's got a little bit of a bend back to the northeast. So you can start working these things on your watch list, but I'm not ready to jump in on any of that right now.
Very good. Much appreciated, Terry.
All right. Thanks, guys.
Thank you, Terry. Appreciate you taking us through that. Alan, yeah, I do apologize for not getting to the transports sooner. I do have an Elliott wave count that Alex put together that I really like. I had sent that via my cell phone last week. I'm not sure if that got to you. If you did not receive that, please either text me on my cell or drop me an email, and I'll be sure to communicate that. So, Alex, sir, we're gonna make you presenter. Get you ready. How are you doing this morning? You ready to jump into it?
Sure.
I can't make him presenter. I don't have permission. So Terry, you're gonna.
My bad.
It's all good.
I'm slacking here.
No worries. If I'd have logged in with the right credentials, I could have done it. So, all right. Alex is going to take you through macro, and then we'll be back just a few minutes from the open.
Okay, guys, so let's look a little bit of a macro stuff. We're going to go over some cryptos, and also we're going to go over through gold and silver. So in general, as you know, Fed meeting is today, so I expect more or less usual stuff from the Jerome Powell, which means that he's going to look a little bit back in a CPI or inflation data. He's going to look also into a current COVID situation, vaccination, and the possible effect into the current economy. As you know, the Fed was very strong in a narrative regarding the jobs, which is one of their mandate. So he's going to also look the latest jobs data, jobless claims, and possibly I don't know if he's gonna turn his voice on a possible tapering date. So I don't expect him to do so, but he might mention, as he did the last time, that the committee will be very transparent in announcing one of the possible dates regarding tapering and how they view the current inflationary pressures. Are they still going to look them as a transitory one, or they're going to change their wording? I don't also expect them to do so, because they changed their overall calculation on the average inflation last year, and they said very clearly they're going to tolerate until over the longer run the inflation average 2%. So I don't expect much, but definitely we should be monitoring their wording on the possible tapering this year, next year, and I think a lot of the market participants will actually await something like that. If we look the chart of the U.S. government 10-year yield, as many people in the world today is looking to. I have seen this 1.2 level hold. Potentially, we might get some reversal today on the Fed meeting. So I still have this wave count as an ABC. up to this 2% resistance. Where is the equality of these two moves? Definitely yields are going to move on the today's Fed meeting. So I'm very curious to see if this is going to hold, or we might see even some type of a five-way move forming, which will not be that good technically for these yields to continue to move higher. So the basic invalidation levels are a little bit lower, around 0.8. So I don't think the 10-year will fall there, but any type of a continuation on the downside will potentially put us in the situation that we might consider this as an ABC to the down to these levels, or even something more impulsive. And we have seen all on the rise on the 10-year yields here. In the Germany, or this is the German 10-year Bund price, it's inverted of yield. I just use this because of the clarity of the waves. We have been very vocal on this chart that it might be in a triangle for the, let's say, year and a half fast forward. I don't see here also any inflationary pressures that the bond market is pricing in. The yields are moving lower, especially after the last ECB meeting, which actually increased their bond buying program. And they also have been very vocal regarding of what is going on in the European economy. Inflation is going a little bit more upside, but their overall 2% objective, it's pretty much far to be sustainably over the course of time. So I expect a sideways movement because, as you know, we are entering very close to September, a possible new Delta variant COVID scare. We have seen extension of these lockdowns in Australia and some other countries. From September to December, we might be also in a little bit more deflationary regarding COVID situation. So we will see. But I guess as I see the vaccination is going, at least in the Western world, if we keep that pace, maybe on a summer 2022, we might be out of this COVID scare. But in general, as this chart is concerned, I expect a sideways move and then again deflationary pressures in this potential wave 5. So let's look a little bit of gold, and let's start first with the dollar index. So we are trading in this sideways consolidation from these lows here. We treat this as a small truncation in the wave 5, which is a normal, seeing the 13-14% move down in dollar. I will not qualify this as a fourth wave move compared to this small second wave here. I've seen some of the predictions in the Elliott wave world that this might be all of the fourth wave. I definitely will not structure that in that way. I think we are tracing a five-way move on the upside, potentially over, potentially some spike on the Fed, which is the usual stuff regarding central bank announcements. And then I think we will see an ABC pullback and then a continuation in this simple ABC form up to this 96, 95, 96 levels until the end of, let's say, November or even end of January 2022. This also might morph into a more complex version of the correction, but even a complex version should have first three waves up and then a pullback and then a continuation. So this is one of the things which I think it might unfold on a dollar index, and we should see after this pullback higher levels later in the year in the dollar index. Let's see how gold is standing. So gold is still in a five-way move down from this possible X wave. This might be also a sideways triangle. We don't know that in this moment, but definitely we might see a push, a little bit push on the upside if the dollar moves lower, but I don't expect anything spectacular on gold. Gold is moving sideways, I think this is going to be a continuation of the downtrend toward this
Yeah.
possible end of 2021.
Yeah. So let me interject there, because I think we previously mentioned there's a very good possibility you see a triangle happen in that X wave also. That's still not out of the question, right?
Yeah, it's not.
Yeah,
I mean,
that could actually triangulate into something before we see another drop.
yeah. I mean, this type of triangulation in complex corrections is a relatively common thing. So we might see some type of an X wave here forming this sideways consolidation, but that will just confirm that we have one more move lower below this 1,670 low, which actually acts as a support here. So I don't see anything bullish on gold, to tell you honestly. I've seen many also prediction of the bull run in gold, but from now, from technical perspective, I think that might be postponed for the end of this year and beginning of the next, because this wave 4 is still within the borders, whatever and however we treat the earlier correction in this wave 2. So I won't be bullish gold. I won't be also trading gold here, because this is a very tiring possible triangle. Or even if we go a little bit more directional, I think probability here is that more we're going to go to the downside than to the upside. So I don't see really any bullishness for now from this current wave structure forming here. Also silver, we have looked silver as well many times. So silver is also in some type of either triangulation or some type of a flattish correction down to this support zone. As you can see, we are trading in silver in a very clear support resistance range from September of 2020. So we have seen 3 waves down, 3 waves up, possibly because the B wave can be higher than the latest stop in this possible A wave. We might be just in a C wave pullback, or we also can have a triangle here in intermediate C waves. Usually in triangles, you have one of the waves to be very complex. I will not say it's a particular wave. Sometimes it's a B wave. Usually it is said that it's a D wave, something which can be very complex, but I don't think there is any rule to that. So either in one of these two patterns, I will look silver to come into this zone, possibly also in the end of 2021. And then I might consider silver for a possibility of starting to move higher here. So it is moving lower. It trades around 24.73, 72 now. And definitely it doesn't exhibit any impulsive price action, which will lead us to conclusion that we are starting an impulsive movement for the higher prices. Let me just cover Bitcoin. Yeah. Yes, Terry, I'm listening.
I was going to say before you go there, so we've actually kind of seen the commodity trade come off the table for a while, right? We saw lumber prices soar, and then they collapsed. We're now starting to see crude oil leveling off. Have you seen something similar going on in copper and wheat or agricultural products? I know I think I saw coffee actually rising. So I was just wondering how all that was playing out.
Yeah. I will show you the coffee chart. I have also made this, if you look my Twitter handle, I have made this average price coffee. It is a very interesting subject because coffee is rising because of the possibility of the frost in Brazil. Coffee is a very specific thing, which this is a very interesting chart, which I will show you. This is what I published in 2019, and this is the 40 years chart of coffee. And these spikes that you see here after some years has passed. This is extremes are when the frost is happening, and there is two types of frost in coffee. There is a soft frost, when actually the plant can recover from the extreme winter. and there is a hard frost where actually a plant is going black and it cannot recover, which means that the crops will be less in yield much than before. And that's why these spikes are producing like 200, 300% move up in coffee price. So the average price over the 40 years was 172. And we were there a couple of days ago. We crossed it around 200 and we are retracing now a little bit. So as you can see here, support was around between 86 and 96. And I clearly said here, because this was a longer term support, we might go up to the average price of 1972, which we did a couple of days back. So the scare of frost is really big. So if that happens, we might see even higher prices in coffee. So the coffee cannot be kind of a benchmark regarding this commodity movement, because the scare of frost goes out of this kind of a mutual correlation between the dollar and commodities. So it's an extreme case, I will say. What we see in wheat is a sideways consolidation. I will still look for lower prices looking the dollar. There is not much of a disturbance in the wheat market and the yields. So I will look for some type of a move down in X where the dollar goes a little bit higher after this correction, and also some prices in the soybean. I think it's still in some type of a sideways consolidation. I think I didn't change the contract, but in anyhow, this move from this huge move on the upside still looks corrective to me. So I think it's going to go where the dollar is going, at least for this consolidation, and then move on the upside. So I will say in general that we have seen a move down in various of commodities. Copper went a little bit more upside. So we have only a three-way move down. So I expect this to develop even maybe a triangle. So then I will have to lift this fifth wave on the upside, but I will expect more, especially if the Fed mentioned some tapering scare and we see some movements down in stocks in a corrective price action, as Bennett is looking on one of his scenarios. I will look for a complex correction down to this support zone. So the situation in commodities, except this coffee extreme situation, it's mostly sideways to the downside, as I see it.
Okay. Thank you, Alex.
So no problem. So in general, Bitcoin has made this pullback, which I still consider as a part of a flat. Our main scenario is still to the downside. Of course, I'm prepared for a possible change. So if this turns out to be bullish, we're going to see a five-way move and a correction, and then I will consider this to be a flat, and I will lift the Fib ratios for this higher degree wave 3. I don't think we still can make a conclusion that this is the change of a trend. There is still no indication about that, and as I said in the beginning statement, this was produced on the false notice of this Amazon news, which is a kind of a very kind of a shadowy stuff, which I don't like, because when you read this article, it is seen that by the judging of the sentences and the wording, it's just based on a pure imagination or some false premises. So Amazon did ask for a blockchain specialist, but they denied yesterday that they are going to put currencies, blockchain or cryptocurrencies like Bitcoin, Ether, and some others, Cardano, on their platform at least until 2022 and even 23. So this type of stuff are still kind of a mischief in the crypto markets. The things that Elon Musk has been doing regarding, I don't say it's deliberate, we can debate that, but we have seen the same thing happening with the Amazon stuff. Maybe this is just buy the rumor, sell the fact news. So I'm seeing a strong resistance here, and I'm waiting for a resolution here. So we came back again in a neutral stance after this move down. So I'm waiting to see what the market will do in this neutral stance. It's going to move down in a 5-way move, which will give me a shorting position on a pullback, or it's going to extend a little bit this flat a little bit higher. So I think we are in a neutral position now. Yeah.
You can see how unnatural the move down there is in your RSI also, how straight from 30 to 70. And in previous moves in previous weeks where you've seen that rise, you've seen it be much more structured, right? This move is a vertical move, and usually when you see such a sharp vertical move, you're going to get a big retracement follow out of that. It needs to have a bounce or two in there. So that looks a little odd to me.
Yeah, I mean, in general, the sentiment was bearish. If this pairs up with some scare in stocks, I think definitely cryptos might continue lower. I didn't see from the higher perspective that anything important happened because obviously this news was false. So in general, the governments are still pursuing a little bit sharper stance regarding cryptos. We have seen Janet Yellen diving into a regulation of Tether, and Tether is still under investigation regarding some bank frauds and all other stuff. So I will not say that we will see an institutional inflows, especially after some Fed. Definitely some institution was here because this was a 170 billion move. But I'm just kind of waiting to see, because for me this is not enough for a possibility of a reversal. I do see on some cryptos, which I talked on the last Crypto Lab, are very close levels in few of them, which indicates that correction might be finished. So I'm very much on guard against the next move and positioning of our members for the possible next move in cryptos. If you like to see more, join me on the tomorrow Crypto Lab for a detailed discussion regarding that. So back to you, Bennett. If you don't have any...
Yeah, no, much appreciated, Alex. Yeah, I was just going to say, guys, if you are interested in the world of crypto, he does have his show tomorrow morning, 9 a.m. Eastern on the Trading Analysis YouTube channel. I'm on autopilot here watching the markets. I'm in Wednesday live stream mode. So, hey, we appreciate you guys tuning into the show. If you're interested in checking us out, you can go to tradinganalysis.com. I would encourage you to subscribe to the Trading Analysis YouTube channel. Terry, Alex, and myself post work there throughout the weeks. Markets are open. We are seeing resistance right off of the B wave 786 retracement possibility. So let's see. We're still 15 minutes in. Watch the typical 30 and 60 minute reversal points, and we'll go from there. If you did enjoy the content, please give it a thumbs up and subscribe with notifications. And we'll be back with you guys same time, same place next week. Any final words of wisdom, boys, before we send them on their way?
Facebook earnings this afternoon after the market. So Google ripped it yesterday. Microsoft, Apple, communication sector is out in the lead this morning. So let's keep an eye on that today.
Sounds good. I appreciate it. And we got the Fed meeting this afternoon as well. So we'll see you guys next week. And thank you for tuning in. Take care.